Welcome, everybody. What I would want to do in this session is talk to you briefly about how I handle the markets throughout the week. I'm going to talk to you about a weekly pivot, a key weekly pivot that you can mark on your charts and use to steer you through a normal week. And then if you want to have a chat, want to ask anything, want to talk about how you're trading and etc., then we can do that. I can turn on the mic. In the meantime, just tap in anything in the chat box and I can turn your mic on if you want to ask me something. All right, so let's just go through a very simple setup that really sort of has quite a big impact on my whole week. And this is the S&P 500 in the 15-minute chart. And what I do is every week I wait until the first 15-minute bar kicks in. That's the first 15-minute bar of the week. And then I sort of zone it. And what I like to do is I like to see how the market performs, how the S&Ps perform, or any market comes to that, in relation to where we kicked off during the week. So you can see on this particular Monday, we came out of the zone and then came back in it, but we came right out of it in the last couple of hours of trading and then finished up coming right back in it. And that's typical of Mondays. I pretty much steer clear of Mondays. Just watching the markets have dropped quite a lot in literally the last few minutes. There must be some news out. And so whatever happens in this area is a massive guiding light to how I handle the whole of the week. So you can see, so that's what happened on the Monday this week. Tuesday of this week, we pretty much repeated the same thing. We started off early part of the day covering this support area from Monday, and then we started to close higher on the floor of the open range. So once we start closing higher on the floor of the range, then I'm buying the floor of the range or buying the dips here and then seeing if we can break out. And then towards the end of the session, once we broke out, we came back and retested the open zone and then pushed up. So this is a really simple, effective way of staying the right side of the market. So I mean, bear in mind on the S&Ps at the moment, we are, let me just double check what I'm about to tell you. We are above the 20 and the 50-day average. So you should be buying dips. Any market that's above the 50 and the 20-day average on a daily chart, you should be buying dips. And you can see this is a better chart on Wednesday. So yesterday, where's my pen? Yesterday, we did okay in the early part of the session and sold off at resistance and dropped right back into, again, to the floor of the range. And then in the last couple of hours of trading, we pushed back to the, so we did a nice V-shaped move. We had a push up into the open, a drop into support, and then a move into the close. So 1, 2, 3. And that's fairly typical. And then today I was surprise, I bought the high of the open range, took it off at this resistance. I just got that part of the move and then stayed away. In the meantime, I'll talk about another trade that I'm keeping open overnight, which should be working very, very well given what I'm just seeing here. This is a very unusual move here, so I'm not sure what really has caused that. Anyway, so that's the S&Ps. If we go back to the previous week, any questions on that? We go back to the previous week, and I'll show you what happened on the previous week and why this is so important. I've marked this one up already. This is for those of you who just joined us, particularly on YouTube or in Zoom, what we're looking at is the Monday open range. And I've got the S&Ps up here at the moment. We'll look at the FTSE and the oil in a minute. And what we've got here is, so this is Monday, the 30th of October. Let me just double check this. I think that's the wrong range. Let me just, where are we? This will do anyway. So the key pivotal price range in this chart was, so I just move this tool out of the way, 41.32 and 41.40 roughly. Now, look what happens in the subsequent trading days on this one. Subsequent trading days, it's so bullish. All we do is sit on the overnight support on this one. And then we push higher. We do the same thing again. There's the overnight support. Into the early part of the day, we hold that, pull back into the doldrums, and then run up into the close. So what's significant here? What can you gain by having this on your charts in this case? Well, in this case, any market that, particularly, as I say, is above the key averages, if it's above this open range and can't even drag itself down, unlike this week, and drag itself down to that, any market that does that, then just buy these support levels throughout the session. Okay, let me show you how that this week unraveled before I look at a different market for you. So here on the Wednesday, we only took some very shallow dips, moved up into the close. Really bullish on this Thursday, the 2nd. What did we do on that day? We started around here at the open. So this is where we were on the Monday. So we're sitting up quite nicely here. So this is a buy high day. Got some higher closes of the 15-minute chart, and then we pushed up or ground higher into the close. And then this was the Friday where we had a data bar, and this pushed up. You had to buy high. You didn't get a chance to really get into that. And then this is the current week, as we just discussed. So let's just take that to another. Any questions? Let me just tap into the box if you've got a question. Otherwise, I'll just keep talking. So if you look at what's happening now, so this week, because we're sitting up, we had such a good week last week. These S&Ps are just, look at that. We've just gone right into the Monday open floor again at 43.60. Smack onto the pip. That's really useful to see that as we're live right now. So let's go back. So this is Monday on the left, where that underneath this red arrow. I had a good push up on Tuesday, repeated the exercise on the Wednesday, or we're doing the same thing today. I mean, this drop, this big red bar that we're just seeing formed, at the moment, all it's doing is falling back into the floor. That's all it's doing. So that's why that's a key sort of marker for me. You can tell how sloppy the week is if you can't break away from the Monday open range. We're just glued to it at the moment. Yeah, it was a decent week last week, and So the market is just taking a breather this week. Let's look at the FTSE because we've got GDP tomorrow. Right, I actually shorted the highs. Let me see. Went in quite heavy-handed. So I've got a couple £100 up on this trade at the moment. Right, let's look at the Monday open on this one. And let's see how the FTSE's performed in relation to Monday. So this is the open range on the FTSE. That's the high, 74.35, and the low was about 74.15. Let's zone that. So it's a fairly choppy week. Note how so just into the close on Monday, we sold off. So we dropped underneath it. We poked, as you can see, it's very choppy. But once we dropped inside it, the high of the open range sold, and then we ended up on the floor into the close. So that was, so if you had your chart and you had this marked up on Monday, then you could have shorted that high at 74.35 and taken it off at 74.10. Not a lot of beans in it. That's why I don't often trade the FTSE. Look at what happened yesterday. When we did push up into it towards the end of the day, we immediately closed lower. So there's your sell signal there. If you immediately close back lower, short the pullback at 74.30, and you would have, so that then broke the support. There's the structure of the chart. Sell signal at 3 o'clock UK time. We pull back to 74.30, and then we drop to 73.70 into the close. So that's a great way of marking out the charts and staying the right side of this intra-week trend. That's just one method I use, but it's quite an essential one of marking off my charts. The other one I'm going to show you is oil. It's a big move in oil this week. I did buy the dip today. Right, let's look at now this blue range is a completely different range I used on oil, which I'm not going to discuss today. This is absolutely essential to how I trade oil. And it's not the Monday open, it's a different pivot. And you can see how this one on this is the most important day here. We break above it, and then once we break underneath the we get some sell signals at the high of that range, and then we do quite a significant drop and we break support. So we do this, we push back into the zone, but we can't even break above it. And then we repeat the exercise here. Now this is the start of a 600 pip move. So we come underneath it, we bust higher, but then we get this big sweeping move underneath it. We pull back into the lower half of the range. So that's your entry point. There's your trigger. You go back into the zone for your entry point, and then you get this big sweeping move. The next day, it can't even get back to the range. It can only get back into resistance before moving. So we've got a high of about 83.50 up here, and we've just seen 75 yesterday. And you could have got that move by using this strategy. All right, so that's I love oil because oil has got a key level that you can use as a, this massive, it's a massive marker for oil, and it doesn't half make your life easier. So you get a retracement, and then you get a structural breakdown, and then what was this? This was Tuesday, wasn't it? Tuesday you drop from 81 to 77, and then the next day you get another structural breakdown. You get pullback into the London or into the New York Open, and then they just plunge it. And the same thing's happened today. Even though we're pushing up, we're trying to push up here. All we're doing is pushing up into resistance, and it's still selling even now. Okay, so the reason why, the whole point of the session today was to talk about the open session. In fact, let me put the Monday open on this one, because I've got that's not the Monday open in that in the blue. I'll put the Monday open in the red, in the pink, and then we'll look at how the market reacted this week in relation to the Monday open. Right, so the Monday open in the oil was here, a high of 81.90, a low of 81.05. Let's zone it in pink. So you can see we never closed above that Monday open zone throughout the whole day. And we got a sell signal at 3:30. So 90 minutes after New York is open, we get this rejection of that Monday open high. And then towards the end of the day, we break down underneath it, and we actually close underneath it into the pit, the old pit close. And once we break down here, you get very, very shallow pullbacks before that breaks down. Okay, so this was yesterday, very shallow pullbacks. This sells into the New York Open, to the Dow Open, and we're very, very feeble move to the upside here at the moment. Okay, so we've spent all week. There wasn't one period of this week where we closed above the Monday open zone. Not one single day. So that shows you how bearish oil was this week. They just pulled the plug on it. All right, so we've looked at the FTSE, the oil, and the S&Ps. And that, ladies and gentlemen, is the end of my short presentation. Anybody got any questions? Anybody want to ask anything? Chat about anything? So what I do is, while I'm waiting to see if you can post any questions, I run a trading room, a live trading room, and I trade mainly the Dow and the oil. And what we do is, this is just one mechanism that we use on our charts. It's obviously a key mechanism, and what we do is so the program I run gets you into the room. I don't have anybody in the room. That's why I don't do free trials. Unless you've done the program, you can't come into the room. There's no point. Otherwise, you'll end up asking a lot of questions about what we're doing. I won't have time to explain it because we'll be too busy trading. So if you want to come on the program, then you can come into my trading room, and you will see how we measure up the zones each day, and make sure that we trade. So I took the S&Ps off of the floor today up into resistance, and then just backed off. And I've been selling FTSE highs into the close, and I have been buying oil dips today. And That's it. So if you, sorry about that, if you want to find out more about the day trading program, drop me a line on, I'll give you the email address. It's mike@tradetheeasyway.com. And I will tell you how, should have this ready, shouldn't I? But drop me an email if you want to know more information. And that's it. What I'm going to be doing, what I'm going to be posting tomorrow is I'm going to post up a couple of short courses, a couple of cheap short courses that supplement what I do and how I conduct myself in day trading in these key markets, because that is a sure way of making sure you're right side of these moves and getting in on these moves. So oil is up today from a low of about 75, and we are almost 100 pips off of the lows as we speak. My FTSE short is in profit, but not doing a lot at the moment. And I'll take a look at the S&Ps as we're heading towards the close. So I generally stay out the markets during the doldrums. I take my money at the open, take my profits, and then if the markets are nice and volatile, then I'll come back and look at them for the last 90 minutes of trading, which in London time is 7:30 in the evening till 9. But if it's a low volume day and the markets are choppy, then I tend to leave it. Sorry, you've just joined us quite late, but I have recorded this, so I will send you, anybody who's coming late on the tail end of this, I'll send you the recording and make sure you get that. But so I'm going to be running some short courses next week on how to, the very best way on how to use fibs intraday, which is a very unusual way of using it, but it's very, very effective way of marking off the zones. So I use basic tools, but I use them in a very, very different way to really create high probability setups. Okay, well, let's go back and have a look at what oil's doing right now. Yes, the oil's the overnight low was 75.20, and today's high was 77. So another thing you can do is, I don't normally do this, but another thing you can do is mark off the end of the session, because basically what I'm doing here is I'm connecting the markets from the previous day's price action to the current day's price, but I'm connecting it intra-week. By looking at the Monday open zone, I'm able to have higher probability trades by making sure I'm A, the right side of the daily trend, and B, I'm the right side of the intraday trend. I will send it out to everybody in the group. I'll send the recording link out about 10 minutes after we finish here, because it tends to render quite quickly. Okay, so we've gone through quite a few markets, so it's really important that you have a look at the recording, because we've gone through quite a lot of stuff. All right, so let's have a look at how the S&Ps have connected today as well. Yeah, so here I don't even need to look at the end of day connection. Look at that. We've gone right, we've dropped fairly hard into 43.60, and we're already 15 pips up off the floor, and we look as if we are capable of holding that and going into the close. So what we're doing today is, it's a pretty choppy week, really. So we had a 1, 2, 3 move last week, so yesterday, and we've got a 1, 2, 3 move where I got out. So I got wave 3 here. It looks like we're getting another deeper retracement. It looks like if this holds, I'd expect it to go at least to 4,400 if we can get this low to hold. And you can do this. Have a look at the quick look at the Dow as well. What markets do you guys day trade? Let's have a quick look at, there's a couple of markers on here. Tell me about you guys. Okay, so you can see, surprise, surprise, the Dow is pretty much like the S&Ps. So on Monday, this is Monday on the far left. There's the open range. A pretty pathetic day. We never close above that open range all day long, and far from it. We broke down. I say we broke down. We had a decent shunt to the downside into the close, and then bounced again. So very choppy. We ended up with a 1, 2, 3, 4, 5 wave move. I love Elliott wave, so surprise, surprise, I'm counting these waves in an Elliott wave fashion. So we ended up with a 1, 2, 3, very short 1, 2, 3 on the Tuesday. We ended up with a 1, 2, 3 on the Wednesday, and pretty much a carbon copy. You know, what happened here is pretty much what happened here, roughly. 1, 2, 3 into the highs. No surprise, we sold just before the open, and we've got a 1, 2, 3 wave at the moment under here. So we've got 2 3 wave patterns, but all we're doing is going one side of the open range, going the other side of the open range, which is what we've been doing all week. This is a good week to talk about this. It's not always like this. Obviously, last week we hardly touched the open range. We sat above it all week. So this is how one simple way that you can tell the markets are just chopping around, chop and slop, as I call it. So it's non-directional. The only thing that was directional, or one of the main markets was directional this week, is oil, on that breakdown in the oil. All right. So this Dow, all it's doing is coming into the Tuesday support. We've been chopping around in quite a tight range. That's a pretty tight range for the Dow. Very tight range, in fact. I would normally expect, when the Dow's working effectively, I would normally expect a good 300, 400, 500 pip range on the Dow per day. And we're restricted to about 250 pip range at the moment. So no point trying to get runners on this. It's great if you're just looking for a quick 60, 90 minute profit, which of course is what I'm doing anyway. But I normally leave some on the table if we're directional. But I have left something on the table with this FTSE. Because if you look at what happened on Friday last week, so we ran up and then sold into the highs on Friday. And all we've done today is got close to that Friday resistance. So if we can break this support tomorrow on GDP numbers, I think this could really crunch lower. Look at the daily chart. The FTSE's in a massive box. This is the last 2 years. Let's get a bit more data on the charts. So we've just had the reason why I'm so bearish on this FTSE is because we just had a series of lower highs. So since that February move, we had a lower high in March, April, lower high in May, lower high in August, rejected the same heights here. And then, but we keep hitting this floor. So if we could break through that floor, I think that's going to be quite a move. So my stop's just above this area here. I don't always hold stuff over, but I decided to do it with the FTSE today because I like the downside so much. The risk-reward ratio I got is fantastic. I've got a very close stop on this. I'm not risking a lot of capital because I got in so high, because I shorted so high. Yeah, I could be wrong because we have been sitting up since end of October. But to me, this is a box play. If you chop around in a box, then the box play kicks in once you reject resistance inside the box. This is it's like a so we've got a head and shoulders really. Let's have a look. How can I make a head and shoulders out of this? So it's shoulder, head, shoulder. So this is the neckline of this head and shoulder to me. It's the main structural support on the FTSE. So if I'm right and we break those lows tomorrow, then I can see us going into the weekend nice and low. If I'm wrong, I'll make a small loss. All right. So I'll send out a copy of the recording. No questions coming in. It's a final call for questions. All right, brilliant. Well, thanks a lot for joining me, and watch out for events next week. I'm going to post at least a couple of events next week. Spread the word, get other people to hook up, and then we can have some bigger sessions. I will be doing face-to-face sessions very soon as well. Again, watch out for some dates, and have a good evening. Thanks for joining me, and have a great evening.